Mortgage tip number 15. It's all about that mortgage process. A couple days ago, I cordially invited you to your very own mortgage party, in which you are the guest of honor, and your host, the loan officer and loan officer assistant, are taking you around introducing you to all the key players that will have a role in getting your loan done. Well, today is no exception to that rule. Today, we meet your lender's compliance team. Your compliance team is responsible for getting you your initial loan disclosures. What are initial loan disclosures? Well, they outlined your loan. Whatever you and your loan officer discussed as far as loan amount, rate, term, it tells a full story of you. It'll list all your debts and your assets. And it's your opportunity to check to make sure the information we have is accurate. In addition to your loan application, it'll have a host of other forms that are pivotal to getting your loan done. One of those forms is a loan estimate, and that outlines the costs that are associated with doing your loan. Here you will be able to review the costs from the lender side, the closing agent, and the total net fees associated with getting your loan closed. Now, a lot of loan officers and their team will tell you you need to get your initial loan disclosures signed as soon as possible. And this is true, especially if it's a purchase, as no services can be ordered and paid for by you until the initial loan estimate and disclosures have been signed or acknowledged. This will not be your only encounter with the with the compliance team with your lender. Any subsequent change, like changing the loan amount, changing a loan from a float to a lock, will require a redisclosure or change of circumstance in which a redisclosure is required. You will be asked to review and sign those documents as well. They are also integral in getting out the closing disclosure. The closing disclosure is what sets the clock for closing your transaction. And so again, this is another document that's really treated with urgency as far as getting it signed, because there's a 3-day clock that starts that determines when in fact you can sign your loan documents. How are these documents delivered? Well, look, in current day, they're generally digital, right? And generally there's an electronic version of them to where you can sign them from your phone or your computer, etc. But they're also still available in a written form. If you prefer to have a written copy, you just let your loan officer or the compliance team know that, and they will get you out a physical copy as well. What we generally do is have our borrowers sign electronically and send them a PDF copy of those signed disclosures for their records. So that's your disclosure team or your compliance team. Again, they are important to the process. And so next time you're doing a transaction and your lender says, oh, we're sending your loan for disclosures, now you know exactly what that means and what it entails for you. I look forward to talking to you tomorrow with another mortgage tip. Have a fabulous day. Bye.